Hello, everybody, and welcome. This is Dorie Clark, and we are here with our weekly edition of Better, Newsweek's live interview show. And our guest this week is David Gellis. He is a New York Times climate reporter. He is also the author of the book, The Man Who Broke Capitalism. And we are going to be talking with David today about his book and also about the broader topic, what is wrong with capitalism and how do we fix it? David Gellis, so glad to have you here.
Thanks so much for having me, Dorie.
Wonderful. And hello to everyone who is tuning in and joining us from around the world. We are glad to have you here. And please type into the chat box and let us know who you are and where you're dialing in from. And of course, any questions that you have for David Gellis. So, David, my first question for you. So, for a very long time, we can think about Marx, let's say, and Lenin and Engels. People have been saying capitalism has some problems. You've written this book, The Man Who Broke Capitalism, and you are laying it at the feet of one of the most revered, or at least previously revered, CEOs of the century, Jack Welch. So tell us, make your case, David. We're gonna have a full half hour to talk about it, but give us the highlights here. Why did Jack Welch break capitalism? What was so wrong with this dude?
All right. Well, thank you so much for having me. And listen, it took me a whole book to explain it, but I'll try to do my best to synthesize it and distill it down to sort of my elevator pitch. But here's the deal. I mean, capitalism, as you pointed out, has had critics for almost as long as it's existed, and of course has had flaws. I'm not here pretending that before Jack Welch, capitalism was working perfectly for everyone. There's always been inequities. There's always been disparities. And yet, it's also the case for several decades, really after World War II. If you think about those post-war years, especially in the United States, which is really where I frame the argument for my book, things were working pretty harmoniously. The wealth being generated by our nation's largest corporations was being distributed relatively equitably. Companies took pride in taking care not just of their shareholders, but also of their suppliers, of their customers, of their employees. They even took pride in paying their taxes. And there was this equilibrium of sorts between society and business that allowed for this enormous flourishing, the great rise of the American middle class, a huge creation of wealth, not only for corporations, but for society as well. What happened? 1981, Jack Welch comes along, becomes CEO of the most powerful company in the country. And we can talk about all the ways in which GE was unique in a way really no company is today. And all of those trend lines start to diverge. Profits start being funneled towards executives and share buybacks instead of consumers, employees, taxpayers. The amount of compensation that CEOs starts getting skyrockets. The pace of mergers and acquisitions increases. The degree to which finance is a center of the economy explodes. And all of these forces, which Jack Welch was literally the pioneer of, start to really undermine the foundations of that version of capitalism that in the post-war years was so beneficial to so many people. I could go on, but I'll let you jump in and tell me where you want to go.
That's wonderful, David. Thank you very much. And we just want to say hi to some of the great folks tuning in to join us from around the world. Mubina's here from Pakistan. We have Wade from Houston, Marco's in Mexico, Phaedra's in Atlanta, Lisa's in Atlanta. You two should get together. Roger's in Germany. Vladimir is here. Bill from North Carolina, Zintel from Johannesburg, Clara from Pennsylvania, and many more. We're so glad to have all of you here. Now, David, a question that I have. So you're laying the groundwork here, Jack Welch, for 20 full years, which is certainly a really long time for a CEO to have the reins of the most powerful corporation in the world. So, obviously he had a huge amount of influence. But the thing that I just want to underline here, which I think underpins this, but maybe our millennial or Gen Z friends may not be aware of it, having not lived through it. Jack Welch was intensely admired at the time. So you're writing this book, and identifying these flaws that have stemmed from his managerial style. But in his time, for the 20 years that he was running, almost everyone viewed him as a messiah of what a CEO should be. What was it that he was doing that made him so popular and so revered at the time.
Yeah, such an essential point, and really the one of the sort of dynamics that made this book sort of possible and provocative, I think, in the way that it has been, and I think it's why it struck a chord, because as you say, a lot of people think of Jack Welch as Fortune magazine dubbed him manager of the century, right? When he retired, he was revered as literally the greatest CEO of all time. But it's important to remember that early in his career, that was not always the case. In the first several years of his tenure as CEO of GE, he fired something like 125,000 people. And it was this wave of mass layoffs and factory closures, the likes of which corporate America had never seen, and that went to destabilize the American middle class in this really jarring way. And as people took stock of that, it was in fact Newsweek magazine that gave him the nickname he hated but could never shake, Neutron Jack. It was a reference to the neutron bomb, which purportedly kills people while leaving the buildings intact. So that was the first couple years of his career. He hadn't gotten the GE stock price going yet. He was doing these sort of unbelievable layoffs, and people said, like, who is this guy? And yet, what happened, and this is critical, he finally got the stock price moving up. And for the better part of 20 years, not the entirety, the first couple of years, stock was sort of flat, but he got the stock price moving. And we can talk about the ways in which he maybe manipulated the stock price to engineer that success and sustain it. But the upshot is he took GE, which was worth something like $16 billion when he took it over, and turned it into a company that was, by the time he retired, worth $600 billion, making it the most valuable company in the world. And so by the shrewd logic of capitalism, just like the who's winning, who's got the bigger number at the top of the stock chart, right? Who literally has the biggest market capitalization in the world? Jack Welch got GE there about halfway through his tenure and kept it there for just about 10 years. And so it was that unprecedented run of what looked like just indisputable financial success that made him so revered that by the end of his tenure, people said, well, he's literally the greatest CEO of all time. Now, that narrative was the one that he was essentially like the exit music as he walked off stage. And yet literally within days of him retiring, things started to go sideways for GE. And of course, they've never recovered. GE is now in the process of breaking itself up once and for all.
Absolutely, and of course, in one of the best timed exits of all time, he retired. Wasn't it like 2 days or something before September 11th?
September 11th. 2001 was Jeff Immelt, his successor's second day on the job. And of course, no doubt about it, right? Like, the whole world economy turned on its axis. Many of GE's most important business units were suddenly suffering. But the deeper problems that it revealed in the wake of 9/11 were these concerns about the degree to which it wasn't GE's jet engines or power plants business that were really troubling the markets and troubling analysts and even regulators as they began to take a closer look at GE. It was GE Capital, the financial unit inside the company that Jack Welch had built up to be this huge behemoth that was representing something like 40-60% of the company's profits and revenues. And all of a sudden people started realizing, wait, GE is not just the industrial conglomerate we all sort of imagine it to be, but it's sort of an unregulated bank. And an unregulated bank in the moment of a global financial crisis is not necessarily a reliable business.
Yeah, great point here. If you are enjoying this conversation with David Gellis, he is the author of the new book, The Man Who Broke Capitalism, hit the like button and hit the share button so that your friends can benefit from it. That is right. We got it right there. And we want to say hi to some of our friends tuning in from around the world. We have Azida from Arizona. We have Masood, who's joining us from Karachi. We've got Mohsin from Pakistan. Pakistan is representing today. Good job, Pakistan. We have Philip the Cat tuning in from New York. We have LinkedIn friend from Krakow. We have Diana from South Carolina. We have Devana from Pittsburgh. Paul is in Boston. Banki is from Dubai. Kausu is joining from Gambia. Wei from Atlanta. Robert in Berlin. We have Malik, who's joining also from Pakistan. Wow, I'm very, very impressed. Pakistan is doing a great job today. And Gail is in North Carolina. Love all of that. Please feel free to type your questions for David Gellis into the chat box. Now, David, okay, here's another like devil's advocate question for you. So you're making a strong case here. Let's bring it home. You're saying Jack Welch is the man who broke capitalism. But what about, say, Enron, right? Jack Welch sort of went up to the line on some of the things that he did, but like in Enron, which was happening around the time that Jack Welch retired, they literally were like making things up. It was like this massive fraud. Yeah. Why is Jack Welch the person who has definitively broken capitalism rather than, the baddies who ended up going to jail for this?
I think that's such a great question, Dorie. And part of what made Jack Welch's influence so pernicious is precisely because of what you just identified, because he did it legally. But what he did was absolutely change the social contract between corporate America and the general public, right? Enron, WorldCom, these companies that went out and just like essentially fleeced shareholders and literally were breaking the law. Like, yeah, they were a terrible company and terrible executives, and some of them went to jail. But they were, let's be honest, the outliers. Most companies were not doing such flagrant misbehavior. Instead, what Jack Welch did was essentially institutionalize the practice of downsizing. He made it an art such that even today, when the stock market, this summer experiences just a little gyration, executives' first response is to fire people, right? Like, if you remember earlier this year, Elon Musk said he was like having bad vibes about the economy. So he was going to fire 10,000 people as if that was going to like magically make the economy better. And so he normalized the practice of treating humans, of treating workers as a cost instead of an asset. And we know what we do with costs. We try to minimize them instead of assets, which we try to take care of and preserve. And so that was just one of the ways in which he was so influential, because he did it above board. And at least in the short term, he could make the case, and other people could make the case, that doing so actually led to short-term profits. And he institutionalized Milton Friedman's view, articulated in the New York Times Magazine in 1971, that the social responsibility of a business is to increase its profits. He was the one that took that sort of theory and made it real. And it wasn't just downsizing, it was deal making, it was financialization, all these other tactics we can talk about. But what he did was create a playbook that so many other CEOs went on to follow. And in my book, I chart this extreme diaspora of Jack Welch acolytes that essentially took that very same playbook, put it to work at literally dozens and dozens of other companies, and then hundreds and thousands of companies subsequently have followed them. And even today, the CEOs of some of the biggest companies in America, Warner Brothers Discovery and Boeing, are led by men who got their start working under Jack Welch, internalizing his playbook, and they're using the very same techniques at those big companies today.
Great point. We are here with David Gellis. He's the author of The Man Who Broke Capitalism. You can learn more about him at davidgellis.com. And I'm Dorie Clark. We're here with our Newsweek interview show, Better. It takes place every Thursday at noon Eastern, 9 Pacific, 5 o'clock, I'm pretty sure, in London. And if you want to make sure you never miss one of our weekly Newsweek shows, just go to my website, go to dorieclark.com. You can download a free self-assessment. You can join my mailing list, and you'll get reminders for things like this. And so, David, you raised the question about the Jack Welch acolytes who sort of spread like little petals in the wind, taking over companies all across America and the world. And a great question came in from Lisa. And I want to just go to this one. Lisa in Atlanta says, Why do you think that when Welch's cronies deployed similar strategies to what he used at GE, it eroded their companies so much faster? Because, maybe you can brief us a little bit on this for folks who haven't yet read your book, but essentially, companies were very, very keen to hire people who had studied at the feet of Jack Welch, and almost all of them blew up spectacularly. So what was the deal, David?
Yeah, it's a really astute question, Lisa. And just to set the table, I mean, in the immediate aftermath of his retirement, literally dozens of his acolytes went on to take over big companies. At one point, I forget the exact number because I just haven't looked at that page recently, but there were, I don't know, several dozen companies in the Fortune 100 who were run by men who studied with him. It was just like incredible influence. But Lisa points out rightly that very few, if any, of these CEOs were able to engineer anything close to the sort of run Welch had at GE. Instead, it was sometimes a matter of months, maybe a matter of quarters, maybe in a couple of cases, a couple of years before these tactics caught up with them. And the companies were suddenly on the ropes. Now, I think a big part of the reason why Welch was able to get away with it for so long was because of GE Capital, this financial arm that he had and developed at the company, and in deliberately and explicitly very early in his career identified as a piece of the puzzle that would allow him to get so far and do so much with GE. Because what GE Capital did at the end of the day was essentially smooth out the company's earnings. Quarter after quarter, he had this army of financial wizards that would look at what Wall Street was expecting, look at what GE had promised the street, and a couple of weeks, sometimes within a matter of days before the quarter ended, they would be making transactions. Sometimes they would be firing people, essentially to take tax write-offs, and they would do whatever was necessary to tweak the numbers just so the stock looked just as the street wanted it to. And no other company had that kind of essentially secret weapon that allowed them to smooth out their earnings in such a way that it glossed over a lot of the more fundamental problems. Where in other companies, those other problems, those fundamental problems, firing 30% of your workforce, absolutely turn your back on research and development and CapEx. Those things can catch up to you very quickly if you don't have a secret weapon like GE Capital to turn to.
Yeah, that's a really excellent point. We're here with David Gelles. He's the author of The Man Who Broke Capitalism. We want to say hi to some of the great folks tuning in from around the world. Karen is joining us from Boston. Hilton is from Brazil. Lauren is joining us from Miami. Mojgan from Iran. Enthia from Nairobi. We have Annette from Southern California. We've got Alicia from Oakland. We have Haley from Kansas. Scott from Baltimore. Ray from Monterrey, Mexico. And we have Craig from Vancouver Island. We're so glad to have all of you here, and including Eunice from Ghana. And so a question, David, came in from Rocio, who wants to know about some of the international implications of this. It looks like Rocio is from Peru and wants to know about, if this has sort of shaped politics, business in Latin America. What would you say are some of the international repercussions of Jack Welch and his style of capitalism?
Well, Rosa, it's great. And great question. And there's no doubt about it that what has sort of became the norm in the United States is often, and in some cases has sort of gone global. Some of Jack Welch's lieutenants actually put this playbook to work in other countries, including in Italy, where one of his closest lieutenants went and essentially took over old line industrial Italian companies, put the same playbook to work, and people absolutely freaked out. More recently, GE, under Jack's successor, purchased a large French company, Alstom, and it was one of the absolute worst deals, but it was very much in the line of Jack Welch's obsession with deal making, just looking for inorganic growth wherever he could find it, trying to boost that bottom line with acquisitions, even if they turned out to be absolutely disastrous. And there was definitely a political connection. I can't speak directly to the influence of Jack Welch on, say, Latin American politics, but I can certainly speak to his influence on U.S. politics, because Jack Welch happened to be close friends and business partners with one Donald Trump. These two men were friends during their heyday in the 80s and 90s in New York City. They went into business together in the mid 90s as GE and the Trump organization helped redevelop a big skyscraper on the corner of Central Park, which is still there today. And then in retirement, Jack Welch and Donald Trump sort of became even closer friends. He appeared on The Apprentice to promote his new online university. And when Trump started really running for office, he often floated Jack Welch as a potential cabinet secretary. Now, he never actually joined the Trump administration in a formal capacity, but when Donald Trump was elected, Jack Welch was brought in to the White House as an economic advisor to the president, which just shows the deep, enduring influence he was having on American society, even almost 2 decades after he had retired.
Really interesting, David. Thank you very much. We're here with David Gellis. He is a New York Times reporter. He's the author of The Man Who Broke Capitalism. And if you want to learn more about David and his work, just go to davidgellis.com. And if you are having fun with this conversation and learning something new, hit the like and the share button so that your friends can benefit from it as well on your social networks. And we also want to say hi to some friends tuning in from around the world. Zulima's here from Mexico. Rita Marie is joining from Ireland. And we have David from Houston, Jimmy from Philly, and more. And a great question, David, came in from Annette in Southern California. And she wants to know, all right, so we've diagnosed a lot of the problems here. What are the fixes? What can be done to bring capitalism back from the seemingly pernicious influence that Jack Welch, has cast on it over the past several decades? What should we be trying? What should we be doing?
Yeah, well, Annette, I wish I had quick fixes. We can talk about some of the potential solutions, but I don't know that any of them are quick. Not that you suggested they would be. I think about this as a generational project. And if you think about the terrain I cover in the book, it's really almost a 70-year story from the end of World War II until sort of where we are today. And I argue that the pendulum was sort of swinging in one direction and then the other direction. But each of these sort of shifts in momentum takes place over generations and decades. And so I think what we're seeing right now with the rise of stakeholder capitalism, all the focus on ESG or CSR or whatever you want to call it.
And what do those stand for, David, for folks who don't know?
Don't get me started, but stakeholder capitalism is a term that's used to define a more holistic view of capitalism, something like what was going on before Jack Welch came around, a model of running a big business that really takes into account not just shareholders and investors, but optimizes operations and the distribution of profits to benefit employees, communities, the environment as well. This is sort of in vogue right now. I think a lot of CEOs are finding it's harder to actually put it into practice that they might like. There's a lot of talk about it, maybe not so much action on the ground. I mentioned some other acronyms. ESG is environmental, social, and governance priorities, which is sort of a way that a lens through which big companies are evaluating some of their financial decisions. We do not need to talk about ESG right now. I think the important point is that there are some companies who are actually trying to do things in a different way. There is a lot of talk at the highest levels of corporate America about rebalancing some of these things that have gotten out of whack. But the truth is, when it actually comes time for CEOs to make decisions, they are all too often sort of just absolutely crushed by inertia and wind up perpetuating the same patterns. In my book, I do identify real potential policy fixes, both on the political policy side and also things that CEOs and companies can do right now to start reversing the tide, absolutely starting to roll back the influence of what I call Welchism. Now, very practically, that includes things like taking better care of your workers on the financial front. Here's the reality. The minimum wage in the United States is still $7.25 an hour at the federal level. Had it kept pace with inflation since 1978, since right around the time Jack Welch was named CEO of GE, it would be closer to $30 an hour. So you got to just own the fact that American workers have sort of been taking a pay cut year after year for the past 40 years. We got to do something about that. On the policy side, listen, in my book, I called for a tax on share buybacks. Lo and behold, in the reconciliation bill, the IRA passed by, and signed into law by President Biden a couple of weeks ago. We're going to tax buybacks. This is good, right? So some of those policy solutions were out there, and some, there's glimmers of hope. But I think the much more insidious problem is, frankly, the public markets. Getting big companies to really move and start to rethink how they orient themselves, how they think about and prioritize their decision making to get past just the quarterly cycle, which of course Jack Welch was the master at. How they think about investing for the long term, investing in their people, being willing, God forbid, to take potentially, a hair of a less, profits, like the slightest modification to EPS in a quarter, in order to make long-term bets, in order.
EPS is earnings per share, correct?
Earnings per share. I'm sorry, I'm diving into acronym land here. But yeah, just taking better care of their workers, prioritizing long-term thinking, investing in people and communities. These things can be done. These are choices people make. Unfortunately, we're in a system that far too often does not allow for them to happen without a whole bunch of resistance from the interests, the special interests at play, from shareholders, from activist shareholders, from hedge funds. So we got a lot of work to do.
Great points here. We are with David Gelles. If you want to learn more about him and his work, just check out davidgelles.com. He is the author of the new book, The Man Who Broke Capitalism. I'm Dorie Clark. We're here with our Newsweek weekly interview show, Better. And David, we have time for one or maybe two more questions, but a great one came in from Alicia, and she is curious. Obviously, you mentioned GE Capital as a kind of structural advantage that Jack Welch had that enabled him to finesse the earnings per share, look really great to Wall Street. She wants to know, is there something special about Jack Welch himself? Did he have some kind of a special sauce, charisma, executive presence? What was it that allowed him to basically hypnotize people for so long?
It's a critical point, Alicia, and I talk about it a lot in the book, not so much in this conversation. But yes, without a doubt, he was an absolutely enormous personality. Relatively short in stature, it bears noting, but compensated it with a ferocious intellect. You cannot dispute the fact that this guy was often quite literally the smartest guy in the room. I mean, he was just razor sharp, knew more than most of the people working for him about their own business units. Terrifying. He was, I'm just going to call it duck a duck here. He was a bully. He was absolutely pushy, aggressive, often rude, belligerent, used words and again, I'm going to call it duck a duck. Anecdotes about Jack Welch, especially from the 1980s and early 90s, are riddled with instances of behavior that today, especially, would be flagrantly inappropriate. Absolutely the kind of stuff that the New York Times would be reporting on if it was happening at a big company today. So he came of age, let's remember, in a very different era, but he was able to just bulldoze his competitors and his allies with absolutely enormous personality that used fear, bullying, provocation, persuasion to get what he wanted. And it was enormously effective.
Really interesting. We are going to do one last speed round question, David. This was a question that I had, and Alicia asked it too. So I'll give her the final word here. She wants to know, is there a role model we can look to today? You, for many years, were the author of the Corner Office column for the New York Times. You get to interact with a lot of leaders and CEOs. Who can we actually look to as someone who's doing things right, or to provide a pathway for how things might be in the future?
Yeah, I don't think there's one person. I think Jack Welch was so singularly influential for all the reasons we've talked about over the last half hour, and many more that are in my book, which I implore you to buy. But there's no one today who has that same kind of power and clout and is using it for the good. In my book, I identify some CEOs of major companies who are doing good things, who are trying to run their companies in different ways, but none of them have quite the influence, quite the scope, the absolute, as you said earlier, the charisma, that secret sauce of personality, but also the real impact and influence that Welch had in terms of shaping the world around him and also making other people essentially follow his playbook elsewhere.
Fascinating conversation. We have been here with David Gellis. Again, his book is The Man Who Broke Capitalism. Thank you all for tuning in and joining us. And David, thanks for being our guest this week.
Thanks so much for having me, Dorie.
Take care, everyone, and see you next Thursday.